VWAP is one of the few trading tools I think beginners should learn early, but not because it is magical. It is useful because it tells you the average price traded so far in the session, weighted by volume. In plain English, that means it gives more importance to prices where more shares actually changed hands. That makes it a better intraday reference than a simple average price, especially when volume is uneven. The formula itself is not the point. The idea is, VWAP keeps adding up price times volume, then divides by total volume. So if a stock trades a lot near one price, that price pulls the line more strongly. I use that line as a map of where the market has done most of its business. If price is above VWAP, buyers have been willing to pay up relative to the session average. If price is below VWAP, sellers have had more control. That is a useful read, but it is not a prediction by itself. Traders use VWAP in a few simple ways. Some watch it as a trend filter, meaning they prefer long setups above VWAP and short setups below it. Some use it as a mean reversion level, expecting price to snap back toward VWAP after a sharp move away from it. Others use it for execution, trying to buy below VWAP or sell above it, so their fills are not obviously worse than the day's average trade. All three uses are valid, but they are not the same strategy, and beginners often mix them up. The most common mistake is treating VWAP like support or resistance that must hold. It does not work that way. Price can cross VWAP many times in a choppy session, and those crosses can mean very little. Another mistake is ignoring context. VWAP is far more useful on active intraday names with real volume than on thin stocks where a few trades can distort the line. It is also less useful after the market has already spent hours trending hard in one direction, because the line can lag badly behind the move. I pay the most attention to VWAP when price is near it after a clear impulse move, or when the market opens and the first hour sets a strong tone. In those cases, VWAP can help me judge whether the move is being accepted or rejected. If price pulls back to VWAP and buyers step in with volume, that tells me something different from a weak bounce on fading volume. The line is not the trade. It is the reference that helps me read the trade. Where VWAP tends to fail is in fast news-driven breakouts or panic sell-offs. In those moments, price can stay far above or below VWAP for a long time because the market is repricing aggressively. If I force a VWAP fade in that environment, I am usually fighting momentum instead of trading it. That is why I prefer VWAP as a context tool first and a trigger second. It helps me avoid bad entries, but it does not remove the need for a real setup, a stop, and a reason to be in the trade at all.